Hello, everyone. Welcome back to our business finance class. This is teacher Phoebe, and we're going to be continuing our lesson in financial market. In this lesson, our goal is for you to understand deeper what financial market is. To start, these are the objectives. To have a foundational understanding about financial market, more specifically the stock market, to present real-life examples on how stock market works, to appreciate the importance of utilizing time, capital, and risk assessments in investment. So now let's begin. To start, we're going to be having a quick review about our previous topic. So I want you to show a thumbs up if the statement is true and a thumbs down if the statement is false. So let us have these examples. Number one, money market is exclusively used for medium-term and long-term investments of a year or more. Again, money market is exclusively used for medium-term and long-term investments of a year or more. True or false? 5, 4, 3, 2, 1. The answer is false. Because the one that is being described is called the capital market. Next, the examples of instruments in the capital market are bonds and stocks. The examples of instruments in the capital market are bonds and stocks. True or false? 5, 4, 3, 2, 1. The answer is true. Because the financial instruments that are being used in the capital market are long-term. Number 3, IPO stands for Initial Public Offering. IPO stands for Initial Public Offering. True or false? 5, 4, 3, 2, 1. The answer is true. Number 4, primary market is the place wherein investors sell stocks and bonds to the public for the first time. Primary market is the place wherein investors sell stocks and bonds to the public for the first time. True or false? 5, 4, 3, 2, 1. Answer. The answer is true. That is why it is being called primary market. Last, secondary market is the place wherein second-hand products are being sold to the market. Secondary market is the place wherein second-hand products are being sold to the market. 5, 4, 3, 2, 1. Answer, false. In the secondary market, the stocks are being sold for the second time. So these are not actually products that we usually see on market, like books or shoes. So now we're going to be diving deeper on our understanding about financial market. To start, let us have this picture. So for some of you, I believe that you're familiar with this Korean drama called Mr. Queen. This is a story about a man in the present, lived and died, and went back and traveled to the past. He regained his consciousness, realizing that he is in the body of a queen during that time in the Joseon dynasty. Now, one of those episodes, the main character told the servant to buy a land in Gangnam. And if she would be able to do that, then her family will be well off for 1,000 generations. Now, why did Mr. Queen do that? Because he knows, knowing that in the future, the land of Gangnam will be like BGC here in the Philippines, which is a business district. Therefore, the value of the land will increase. Try to imagine if your ancestors or your grandparents did that in the past, and they invested their money buying lands from the past with little or less capital, and now the value of those lands have surpassed. But did you know that it is also possible for us to invest not just in real estate, but also in financial market? And that is what we're going to study today, about the stock market. Our best example is Facebook, now today also known as Meta. During May 18, 2012, it was their initial public offering wherein they launched their shares for the price of $38 each. So the shares, just like what we discussed last time, are ownerships, wherein in an initial public offering, people can participate in investing their money to contribute to the capital of the company. So even if Facebook was already worth $1 billion during that time under net income, they also offered their shares to the public in order for them to have more opportunities in growing their market. Now, during that time, on May 18, 2012, they offered 421,233,618 shares with the price of $38. Try to imagine if your parents purchased shares during that time with a capital of $1,000. So let us try to compute. So with a capital of $1,000 and the price of each share is $38, let us see how many shares will you be able to buy. Now here the answer is 26.3157. But since this is shares, we're just going to get the whole number, which is 26. Now imagine the 26 shares which were owned by your parents upon investing during the IPO in 2012 are not yet being cashed out until today, which is year 2024. Now it is about time to know what happened to this $1,000 investment that was able to buy 26 shares during 2012 today. What is the value of these shares? So what we're going to be doing is that we will visit the financial market and see the exact price of Meta. So here, let us go to Yahoo Finance, and then we're going to be typing the name of Facebook, which is today known as Meta Platforms Incorporated, and let us check the price of each share. So by looking at this, we can see that it is worth $527.34. This was the at close price last April 5, during the time that the stock market was last closed. So imagine the 26 shares that were owned by your parents, bought within the $1,000 capital, is now 527.34 each. So let us multiply the 26 shares to $527.34. Then it is now $13,710.84 coming from $1,000. This is actually one of the basic principles as to how people earn by investing their money. Imagine the capital that they invested, small amount of capital invested at early period of time, at the right period, to the right company, and assessing the risk really helps in earning in investment. And this is one of the basic way as to how the stock market works. Utilizing time, utilizing your capital, and identifying which company to invest. Because not every company should be invested. It requires a lot of research, a lot of ability to understand the potential of this company, as well as understanding about the debts, the obligations, the equities of the company, as well as the probabilities or potentials as to how it can grow. So what you can do if you would like to invest in the stock market is to really equip yourself with a lot of research skills, understanding or analyzing financial statements, as well as really learning how to manage your risks using your capital at the right time. Now let us have another example. We have Jollibee Foods Corporation. The IPO, or the initial public offering of Jollibee, was $0.81 per share. So let us try to identify if you invested your money during that time with a capital of $1,000. So how many shares were you able to buy from the $1,000? So 1,000 divided by 0.81 is 1,234.56. So what you're going to be doing is to just get the whole number because these are shares. And so we have 1,234 shares. Now, you rested or you tried to invest your money to the stock market for a long period of time. And so until today, it is only by now that you decided to withdraw your money from the stock market. So your 1,234 shares can now be sold for the price of $4.2. Therefore, the answer is $5,182.80. So from your 1,000 capital back during the IPO, today for 2024, it is 5,182.8. Please take note that every single day, the price of the shares can actually shift. Either they would increase or decrease in a minimal amount or in a gradual amount, depending on how the economy is doing. So now it is about time for us to test how you would be applying this on your own. So we're going to be having this two problem set wherein you will be receiving different capitals in dollars. So try to look at the picture and you have your specific student number and these are your capital. So in this capital, for example, you are student number 1, your capital is $20,000 and you are going to invest in these two companies. So the companies are the same for all students. The only difference is that you will be having different capitals. For our company number 1, we have McDonald's Corporation, which offered their IPO during June 30, 1966, with a price of $0.173 per share. And we also have the Home Depot, which had their initial public offering on May 21, 2017, with an initial price of $139.05 per share. So try to apply this on your own and let us check if you will be able to identify how much you have earned or whether the company has actually increased its shares today. So answer the question letter A, how much is the current price per share? By looking at the price of it today in the market. Letter B, how many shares were you able to buy during the IPO? And letter C, how much is your current investment in dollars if you will be cashing it out today? So that is it for our lesson. I hope that you were actually encouraged and well informed about how our financial market, more specifically the stock market, works. I hope as well that it also encouraged you to be interested in utilizing your time, your capital, and understanding about what kind of person you are in terms of taking risk. Remember, the stock market is a high risk investment. And when we talk about risk, it is not always negative, but instead it is the possibility of losing or gaining something. So if there is a high risk, therefore it means that there is a possibility for you to earn a lot of money, but there is also a possibility for you to lose that amount of money. And so it is important for a student or an individual to understand what kind of investor you are. Are you the kind of risk taker in terms of high risk? Or would you prefer the average investment? Or maybe the low risk investments, which are actually related to our previous topics. Moving forward, we're going to be studying more because what if, for example, you decided to invest money regularly? How much would you be able to predict in the future? But for now, please make sure to review this lesson because we're going to be having a long quiz soon. That is it for this lesson. See you next time.